Euro dollar. So we've seen a bit of a bounce in the euro out from recent lows, though following the breakdown that we saw earlier this week below 107.96, that critical range low, the market is favored to the downside and should see deeper setbacks towards that December base at 105.21. Look for the current rally to be very well capped ahead of 110 in favor of a fresh downside extension back below the recent low that we saw at 107.11 this week. At this point, only back above 110.60 would compromise the immediate bearish outlook for euro dollar. Sterling dollar. So cable is broken down to a fresh multi-year low, the lowest level since 2010 after taking out the 2015 base at 145.66. But at this point, technical studies are showing a little bit oversold on the daily chart, and there is risk for a bit of a bounce before the market considers the possibility of additional bearish declines. Look for the possibility of a correction that could extend towards the 150 area before the market considers that bearish resumption. Ultimately, though, only back above 152.40 would compromise the immediate bearish outlook for cable. Dollar yen. So dollar yen is broken down to fresh multi-day lows, taking out key support at 118 and breaking down towards the 117 handle. At this point, the focus is now on the August base just ahead of 116, while any rally should be very well capped towards 120. It is worth noting that the market has been oversold, and so a bounce towards 120 should not be ruled out. But ultimately, only back above 123.76 would compromise the immediate bearish outlook in dollar yen. Euro Swiss. So the Euro Swiss market continues to trade within a very tight range over the past several days, weeks, and months, though we are seeing a bit of a contraction in this still low volatile market, and this could be warning of an impending breakout. Given the rally that we've seen out from the January record low from 2015, the recovery is favored to continue above the September peak at 110.50 and towards 115 further up. At this point, only back below 107.15 would compromise this outlook and open the door for a potential structural shift back to the downside. Aussie dollar. So Aussie has been way down in recent trade after once again being well capped towards 74. This consolidation that we've seen over the past few months is classified as a bearish consolidation within a broader downtrend, and deeper setbacks are favored back towards and eventually below the multi-year low that was set back in September of 2015 at 69.08. At this point, only back above 73.85 would compromise the bearish outlook for Aussie. Dollar CAD. So dollar CAD is seeing a bit of a pullback of its recent high up towards 140.170. That's a multi-year high, a 12-year high, as the market stalled just shy of a measured move objective at 42, which also coincides with the July 2003 peak just under 142. But at this point, given how stretched daily, weekly, and monthly studies are, there is risk for limited upside from here in favor of a more significant bearish correction back down towards potentially the 36 to 38 area, from where the next higher low will be sought out. Ultimately, though, only all the way back below 134.57 would really compromise the current highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is broken down in recent trade after once again stalling out by some medium-term resistance in the 69 area. At this point, deeper setbacks are favored, but the market will need to first take out key support going back to November 18th around 64.30 to confirm and accelerate declines back towards the multi-year low that was seen in August. At this point, though, only back above 69 would compromise the bearish outlook, with any rallies now seen very well capped ahead of the level. SPX 500. So the S&P 500 continues to show signs of the formation of a major top, with setbacks now extending and establishing below 2000 and opening the door for the next key downside target of 1870, which represents the low that we saw back in late September of 2015. At this point, look for any rallies now to be very well capped ahead of 2050, with the lower top now sought out ahead of the next downside extension towards and eventually below 1870. Ultimately, only back above that high that we saw going back to the 29th of December, which came in at 2083, would compromise the immediate bearish outlook. Gold. So a nice recovery in the gold market over the past several sessions, with the market finally taking out critical resistance at 1100. Thursday's daily close above 1100 is a significant development and could be setting the stage for the next major upside extension in this market towards 1200. At this point, the break above 1100 does take the immediate pressure off the downside and suggest that we could have a meaningful base in place at 1046.